Hello everyone, welcome back to another video. I have a list of things that I want to go over in today's video, and these were really eye-openers for me, and I want to share them here so maybe some people can pick up a few things, and also for my mental recap. So let's get into the first thing, which was the weekly outlook for previous week. I mean, not previous week, this week. So it's still in progress, and let's get into it. So the initial drawn liquidity was, for the first scenario, this anchor high here. And I also mentioned that the wick of the previous day, which is this wick here, is all the resistance liquidity. So this is one of my two draws on liquidities. So I would have liked to see price run through this and then continue running this anchor high. That was for the first scenario. If there was no, basically no SMTs or no arrays that would have contradicted the move higher. And this was the second scenario. The second scenario was that we go down here and we take this low here. And this is going to be very important for what I'm going to speak on in a couple of minutes. So just take a mental note of this screenshot right here. Notice how the market structure looks like. Notice the manipulations and the distributions, as well as the accumulations. Try to really take in everything in this image here. And also within here is a weekly fair value gap. Okay, so this is we have an IMS into the mitigation since it was not filled. A deep quarter 4 discount has not been yet filled, so yet this is possible. What I mean by a deep quarter 4 discount is if we go on to the chart here, hide this, and show it. If I measure the mitigation range discount, it would be this quadrant here, which is pretty deep into the mitigation. But however, as I mentioned, I would have liked to see the mitigation filled, which is this here. That's what we got today. So let me get into the first scenario and how actually both scenarios I'm anticipating to play out. The first thing is how on Monday we had the previous range taken out. Notice how this candle here looks. Notice how it doesn't really close up or doesn't really close lower. Also, take note of how we have this SMT with the S here. As you can see on the daily time frame, the anchor high that was on Wednesday 10 was taken on Monday. That makes it a SMT. So the first thing that we have with this price action here is that the first drawn liquidity was met, and the second drawn liquidity was SMT, which counted as being met, but I will not refer to this anchor high anymore. Okay, so let's get into this price action range here and how we have these distributions and manipulations that take place. So as I mentioned previously, the way this candle closes here is the accumulation. We have a candle here that is also another accumulation candle, so two accumulation candles back to back. And then we have today's candle, which was a manipulation candle down into the presumed scenario, which was scenario 2. But this actually occurred once we SMT'd the anchor high and took the drawn liquidity. The problem here is that since we had this SMT with this anchor high, this makes me second guess this weekly fair value gap here. However, if we had just initially moved lower without S&P this high, then I would have anticipated it to drop a here and then move higher. But now I'm reconsidering, and it's making me second guess on how we're going to react into this fair value gap. So let's go back into pre-data range and let me dissect this piece of price action here. First thing we have is a distribution phase, and then we have a kind of pause here, preparing for a retracement. We retrace into a discount, giving us the first manipulation leg. So this is manipulation phase 1. We accumulate sell orders, and then we start dropping lower. We first take out low resistance within this candle's high here, since this was all low resistance. And then we start dropping lower, getting deep into this price action if we go to the 4-hour. You can see how this really plays out in the lower time frames. So you can see that we have that same distribution phase highlighted, and then we have here trend line liquidity. Once we go down here and take this liquidity, we hover above the mitigation block, and we do not take it. So this here, this move lower here, leaves this liquidity pool here, preparing for a high probability soup. So the first manipulation, and then the second manipulation. This second manipulation is to induce early buyers within this leg higher. Lots of people who have bought here have recently been taken out with this third manipulation, preparing for distribution higher or preparing to retrace to inverse this weekly imbalance here and then head lower to anchor low. However, my drawn liquidity is highly towards higher prices, considering how ES has been moving higher and the Dow, how it's been exploding recently and how it's been catching up with how NQ is moving for the past couple of months. So you can see how Dow was chopping up pretty badly until recently, last week Wednesday, where we got this huge move higher. So I want you guys to keep this in mind. We had this move lower here to induce early sellers, and then manipulated them out as this on this presumed support level here. And then we started moving higher, inducing buyers. When we make a move higher like this, and then we leave these lows here, especially this low, many breakout artists will try to pick this top here. So this makes this level here a level of liquidity. Here is a bunch of spooling orders for people that are willing to sell. For smart money to order pair, they must counterparty with these people that have their selling orders here because they want to fulfill large orders. This move higher here had two purposes. One, to induce early buyers within this leg higher here. So there will be lots of liquidity here, here, and eventually at this low. And we also have this liquidity void here, which needed to be rebalanced. The second reason was to induce willing sellers at this low. People who were trying to catch a move like this, move lower, taking out this low. Basically what they're anticipating to see is then a drop lower. But what this actually is, it's a hyperbolic soup. The same way we have the IMS, this is what's happening here. And I want to jump into a lower time frame. And I want to give you guys an example. Lower time frame, since price is fractal. Put this back here. Let me find where the example was. Okay, here. Doesn't this move here reflect so accurately to the daily chart? Compare this piece of price action here with the daily Nasdaq chart. So we have the initial manipulation lower, the second manipulation higher to induce buyers and breakout order to set this low, and then we soup it, mitigating a higher time frame key level with a deeper discount to then move higher. Isn't that the same thing that happened here? We induce sellers within this early manipulation lower, and then we induce early buyers within this manipulation higher and leaving breakout orders at this low. So this here registers for a higher probability soup, moving into a key level, and then we can start to expand higher. But what does this leave behind here? Look closer. Compare how this looks to this daily chart. Doesn't this make so much sense? We already formed the breaker here from the A to B leg. All we need to do now is basically finish it and create the last leg of the breaker, which is the D. And as you can see here, it's the same exact pattern repeating over and over. C into a deeper discount and a key level. C moves into a heavy discount, taking out the C, and moving into a key level. And also, if you can draw out the opening range gap that happened on this day, which was right here, from this one to make it a different color. What do you notice we fill within this move lower into a deeper discount and into a key level? We fill this opening range gap. The same opening range gap which we earlier used in the day as a Judas into. We Judas into the gap, traded higher, took my first drawn liquidity, which was this high, traded lower, disturbed the liquidity imbalance cycle, preparing all for a high probability soup. Let's compare that to the daily one, to the daily chart. Let's move on to the 4-hour actually. So actually, let's stay on the daily. We move higher, create the early manipulation to induce early sellers. Sellers here are then taken out, but this move higher. This move higher induces early buyers, having bigger orders start putting their stops here, and this gives us willing sellers. When price takes these willing sellers, it order pairs smart money's large fulfilling orders with counterparty, the people that have their sell orders down here. Smart money buys their sell orders, preparing to take out B, creating the breaker. C taking A initiates the breaker. So this leg here is the breaker. Let's look on lower time frame. Here. C initiated the formation of the breaker. What I'm anticipating is this to be inverted. Take out B's high. And then trade back into A to B's breaker, which is around here. And then from there, a reassessment. Doesn't that make so much sense? The sweep of the initial mitigation is not for no reason. It's not a magical sweep that happens just to happen. Look at it from a liquidity perspective. Induces sellers, induces buyers, willing sellers, takes willing sellers, fulfills smart money's large orders with order pairing with counterparty here, trades higher, creates the B. Creates the formulates the breaker, which is the presumed D point in a breaker, which takes it the B point. After this is a hint. This is smart money reaching its hand out to you and hinting to you that we turtle souped B's high. This is not going to be a respect breaker. Presume D, which takes B's high, is another turtle soup. What makes this so prominent is that it's a breaker, and it delivered from a turtle soup, initiating another turtle soup, now bouncing on overflow. Hence, this means you can expect some accumulation. We accumulated until we got the 930 open, which gave us a juicy swing higher, running into, let's take a look here, running into this wick here, and wicks are viewed as gaps to the algorithm. So every time you see a wick, this can be viewed as resistance. Of course, if the order flow is correct. Look through it. Start a new liquidity imbalance cycle. Liquidity, imbalance, liquidity, imbalance here. Failed to take the liquidity. Start moving higher. And with today's big drop lower, I already explained why this might have happened. Take A's low into a deeper discounting key level, anticipating this 4-hour imbalance here to be inverted, and then create the same cycle that we've been looking on the lower time frame. Do you see how everything connects? We just connected this 15-minute price action, connected it to next day's price action, and then moving into today's price action, and it all connects and all makes sense. turtle soup, initiating confusion with an order flow, accumulation until next day open, 930 degrees swing into previous day's wick, viewed as a gap by the algorithms. We start trading lower for the purpose of what? What can we be reaching for so badly that we will do it overnight? As I mentioned, A, on the higher time frame. Connect this to the lower time frame. Why do we have this move higher initially? To induce buyers and to place willing sellers at these low. And then we go and you sweep the initial mitigation. The initial mitigation is not some magical low that's going to be swept. There is logic to this. The same way that we so urgently moved down here and created this imbalance here, which proves that there are so many, that we are so rushed to move lower, that we leave behind this footprint here. And then we swoop is low. This imbalance here was created for what? It wasn't created for no reason. I can tell you that for sure. Let's connect this to the 4-hour. A initiates buyers, willing sellers here. The same thing I mentioned on the 15 minutes. We drop lower, displacement. This imbalance here was not created for no reason. High probability soup into a deeper discounting key level. What happened when this scenario took place on the 15 minute? What happened to the imbalance that was from the B2C, from the B2C leg? What happened? Let's take a look again. What happened to the imbalance that was created from the B2C leg? Inversed, rejection block. Go back here. Now, what can you anticipate can happen to this leg here? The B to C leg. The same exact thing that happened on the 15-minute chart. Because price is fractal. You can anticipate this move here, this leg here, to have all of its arrays on this leg inversed, a retracing to fair value gap. Remember the PD array matrix, turtle soup, rejection block, order block, inversion, fair value gap, delivery to drawn liquidity, which is this high here. Turtle soup, inversion, fair value gap, and this also here becomes a order block, and then delivery higher. Doesn't this make so much sense? Doesn't this make more sense than, oh, there's a imaginary roof and imaginary floor, and price bounces within these two imaginary levels because I say so. Price does not move based on trend lines. It does not move based on indicators. Indicators are just condensed and so pressured and condensed down a form of what's happening on your screen. What's the point of looking at the RSI when the RSI is just a condensed version of what's happening with price action? All you need on the charts is right in front of you. The x-axis and the y-axis. Y-axis, price. X-axis, time. That's it for the price action section of this video. I want to connect this to what happened on Monday. Here. The same thing I just spoke about right now. After that initial move lower, I got faked out by that manipulation move higher, which manipulated me into longs. But what really happened is that we hovered above a key level that we were willing to meet. Again, two settle willing sellers and order pair smart money orders. What happened is that we got really close to filling the opening range gap, manipulated higher, inducing people into including me into longs, which provided enough liquidity for smart money to then ultimately take the lowest third soup or the pair with counterparties for the opening range gap to then really head higher. The same thing I mentioned. The breaker initiated with the C, deformulating the turtle soup, which, since we were in bearish order flow, since we're in bearish order flow, this was a bearish soup. Head lower after it. Oh, sorry. What I meant to put here, this was a mistake on my side. What I meant to put here is that we turtle soup this low here and then turtle soup this high here, initiating consolidation, initiating order flow. That's gonna be it for this video. I hope you guys enjoyed this video. I put in my EOD, my outlook, and I also mentioned some manipulation and distribution price action and how you can formulate it from lower time frame to higher time frame. And yeah, thank you guys for watching.